SGOV is the 0 to 3 month Treasury Bond ETF, an ETF that pays monthly dividends and can have you sleeping real good at night because it's a very low risk fund. SGOV is ran by iShares, a BlackRock product. BlackRock is a super large asset fund manager, a very ethical company, of course. They provided us this fixed income investment that gives US Treasury bonds that matures in less than 3 months. This is a great way to have your uninvested cash work for you. Because, you know, we all just have plenty of extra money just laying around these days under the couch, under the sofa. The US personal savings rate is at a blistering new low at 3.4%. But for that small percentage of you that have extra cash laying around, US Treasuries are a very conservative investment strategy as they seek to preserve one's capital. This is because US Treasuries are considered among the safest investments out there. Reasons for this include being backed by the full faith and credit of the US government. The US can always just print more money. Whether this is a good thing or a bad thing, morally, it's not for me to decide, but that's just more money in your pocket, at least in the short run. The US government will not default on its liabilities. Never in US history has this happened. Not under Donnie, not under Sleepy Joe's watch, making treasuries super safe. SGOV has a super juicy 30-day yield of 5.19%. We can see its holdings is, surprise, surprise, a bunch of Chinese bonds. Okay, just kidding. They're US Treasury bills expiring at various weeks. I know you guys want those high 60% yields these days, but despite what some confidence men on Reddit are telling you, there's actually risk involved when seeking those types of returns. Who would have thought? With SGOV, we have a very low risk opportunity here. Due to the current interest rate set by the Federal Reserve, they are delivering over a 5% plus return. And nobody knows for certain when Uncle Jerome will actually lower interest rates. The latest fund meeting minutes show that there was actually no indication of possible cuts just yet, meaning those SGOV high monthly dividend payments may continue well into 2024 and beyond. There's no covered call strategy going on with these. There's no upside given up. There's no NAV erosion. There's no need to, I'm doing this in air quotes, there's no need to reinvest the dividends. However, just know that ETFs like SGOV, they probably aren't going to give stellar returns either. Investing in companies like Nvidia have returned over 230% in the last year. With SGOV, you're just getting that 5% yield, and that's about it. We can see if we look at its stock chart, it's pretty interesting looking, right? Every month, the stock or ETF will continue to rise, and then on the date of its ex-dividend, it's going to drop. It's almost as if a stock or ETF drops by the amount of the dividend on the ex-dividend date. The current S&P 500 dividend yield is 1.62%. With SGOV, you're getting 3.5 times that amount. Just know that the dividend is going to be directly tied to the federal funds rate. So we can see in 2020 when the fund was first launched, interest rates were near zero. And the Fed has been raising it ever since to fight inflation, and that directly correlates to SGOV's yield, which has continued to go up as interest rates have went up. Don't quote me on this, but US Treasuries income is typically exempt from state and local taxes, but taxed as ordinary income on the federal level. Confirm with your tax advisor, but it appears these could have some tax advantages. SGOV currently has $17 billion in assets under management and a super low expense ratio of just 7 basis points. Want monthly dividends and a place to park short-term cash with little risk? SGOV might be the right fit. Don't want to support BlackRock? Well, there's State Street, not much better. They run one called the SPDR Bloomberg 1 to 3 month T-bill ETF, ticker symbol BIL. Billy, old Billy over here, has $37 billion in assets under management. They pay out monthly dividends and have been around since 2007. They currently have a 30-day yield of 5.27%. That's extra juicy. This one's going to give exposure to publicly issued US Treasury bills that are going to mature between 1 to 3 months. They have short duration fixed income that is less exposed to fluctuations in interest rates than longer duration securities. And you can see the stock chart looks exactly like SGOV's, with the share price going up throughout the month and then it will drop on the ex-dividend date by the amount of the dividend. So it's going to have that mountain range, peaks and valley looking stock chart. Again, you're not going to get rich with these, but you know what to expect. And sleeping well at night, that's definitely worth something. It's a great way to protect the principal and collect cash monthly. Will it make you rich alone? No, but it's a great way to hedge inflation and you get some buying time in the short run till you find your next investment. If you like this video, be sure to hit that like button for the algorithm, subscribe. I make videos like this all the time. I'm beating the market this year in my $160,000 dividend stock portfolio that I was able to accumulate in my mid-20s. See my full portfolio and all my weekly trades posted on my Patreon. Join the Dividend Discord. We have some great conversations in there. My videos are always found in podcast form under the Collect Cash podcast name, and I'll catch you on the next one.